Hello everyone, and welcome to today's Lunch and Learn. Thank you for joining us. Today we're going to be discussing the commissions module, also known as incentive compensation. We'll begin our agenda today with a little bit about who we are as Guru Solutions. Then we'll review the benefits of NetSuite commissions, do a little Commissions 101 to review some terms and concepts. Then we'll do our demo. After that, we'll have a recap. We'll discuss how Gurus can help you, and we'll have a question period at the end. To start us off about who we are, my name is Dylan Golo. I'm a business solutions specialist at Guru Solutions, involved in the pre-sales efforts for solution alignment, requirements gathering, assessments, and demonstrations. At Guru Solutions, we are cloud consulting pioneers. We scale up business with cloud solutions. We've been living in the cloud since 2005 with NetSuite, with over 800 projects completed and 600 active clients. We've been a 5-star NetSuite partner for the past 6 years. If you'd like to know more about how to scale up your business with cloud technology, please reach out to us and get you a copy of this book by our president, Martin McNichol. So what are the benefits of the commissions module in NetSuite? Well, it gives you real-time visibility, as your existing transactions are used to calculate commissions. So there's no need to export and manipulate data. And also, you have out-of-the-box reporting that provides a staged view of commission's eligibility, authorization, and payment. Secondly, it's integrated. So it scales with multiple subsidiaries in OneWorld. It functions seamlessly with NetSuite Payroll, and you can even leverage team selling with contributions per team member. And finally, it's flexible. You can capture a variety of revenue-based compensation models, and you have the ability to separate quotas and rates per employee for a variety of criteria, whether it be by subsidiary, class, department, location, or item. And you have additional flexibility with the commissionable item search. Now let's do a little Commissions 101. Now here's some of the common commission structures that we'd expect to see in companies, but we're going to focus today on variable commission, number 5. On the right, I gave an example of what a variable commission plan could look like, with multiple rates and breakpoints for those rates. Now, typically we'll see 2 types of compensation models, whether it be revenue-based or non-revenue-based. In revenue-based models, everything is measured from the transaction, whether it be sales amounts, quantities, or profitability. Now, in this type of model, we normally have a transaction that triggers commission payments as well. And this generally fits very well into the native functionality of the commissions module in NetSuite. Non-revenue-based models could be something based on a management by objective structure. This could be a metric that's not based on sales, such as productivity or organizational planning. Essentially, it could be performance measured in some other way. Fitting this into NetSuite might require customization, so I would say this requires further investigation. Now, what are our options for the triggering transactions in NetSuite? We have the sales order, then the invoice, and then the payment. This can also be called the booking, the billing, and then the collection stage. Now, let's identify where these business terms will fit into the NetSuite architecture. Generally, with revenue-based compensation plans, we have quotas, rates, amounts, and thresholds for those rates, and sales criteria, whether it be based on item classification or custom criteria. Now, in NetSuite, understandably, we would put the quota in the quota record. Then we have commissions plans. These commissions plans house commission schedules, which are where we have our rules for how commissions will be calculated. That's where we keep our rates, amounts, and thresholds, as well as our sales criteria. However, if we have custom criteria that we need to fit in somewhere, we can also use a commissionable item search within the commission schedule. Now let's do a little more defining of these NetSuite terms. A quota record is used in conjunction with a commission schedule. So if a commission schedule relies on a quota, we need to have a quota record defined for that employee. A commissions plan is where we match schedules to employees for certain date ranges. It's also where we can view commissions calculations. Commission schedule itself is where we have the criteria for line item eligibility, the rates, thresholds, and if we have bonuses, we can define them here as well. Commissionable item searches allow for additional line item criteria to exclude or include lines. Now, although our demo today is not going to include a commissionable item search, I want to include the definition here just for completeness. Here's the simplified flow of transactions all the way through to eligible commissions. So starting with bookings, billings, or payments at the top, if an employee is defined as a sales rep or within a sales team on those transactions, then the commissions plan that employee is assigned to will read through the schedules that are on that commissions plan to determine if any of the line items in those transactions are eligible for commissions based on which items, classifications, or lines are identified by the commissionable item search. Finally, those commissions will be eligible, and then they can be authorized or approved and finally paid out using the Pay Bills functionality in NetSuite. Our demo today will generally flow like this. We'll begin on a commission plan, then look at the schedules within it, and the quota that that employee's been assigned. Then we'll take a look at the transactions all the way through to where they arrive on reports. Finally, we'll look at the process for authorizing commissions, and then go back to the report and see what's been updated. For our demo today, we'll be looking at a services sales team. Their commissions will be eligible after customer payment for implementation services. Team members will have a 5% rate up to 100% of quota attainment and 10% after. Their bonus will be $10,000 at 100% of quota attainment. The team manager will have a 1% rate up to 100% of team quota attainment and 2% after. There'll be no bonus for the team manager. Now, let's jump into NetSuite. Today we're going to be using an account configured for Dilly Services Company with OneWorld enabled. I'm going to be navigating with the controller role, so if you're using the administrator role or another custom role, these menu paths will differ. Let's begin by reviewing our subsidiary structure with the navigator in the bottom center of our page. At the top we have our headquarters as the root subsidiary. Then we have 4 consolidated subsidiaries beneath it: the Americas, Australia and New Zealand, Asia, and EMEA. We also have a non-consolidated shared services subsidiary. Beneath these consolidated subsidiaries, we have our child subsidiaries. This is where our transactions will reside with our customers. Now, the reason I'm bringing this up is because we have the ability to set quotas or schedules at all 3 of these levels. So we could have a quota at the consolidated headquarters level, or at each of the Americas, Australia, New Zealand, Asia, and EMEA levels, or one level down again, we could have a quota for each independent child subsidiary if we did choose to. Even more than that, we could break it up by department within each subsidiary after that as well. The schedules have the same ability, so we could have schedules based on each level of subsidiary, and that means we could have separate rates or bonuses based on sales within those subsidiaries. Now, we'll get back to that later, but let's go to the menu paths and see what we're going to be going through today. Starting with payroll and HR, then commissions, we could navigate to employee schedules, plans, plan assignments. We could authorize employee commissions in bulk, approve them in bulk, or create an individual employee commission. In terms of reports, we have our commissions overview report, which is the one we'll be reviewing today. This will give us a staged view of commissions from the transaction, the eligibility of commissions, if commissions have been authorized, and if commissions have been paid. Now, this is on the transaction level. The detail gives us our line items. The estimated commission report is actually deprecated and no longer used. And then these 3 reports are actually the independent stages that I explained exist within the overview report. So if you wanted to see only the commissions that are pending authorization, you could use this report. Only the authorized commission, you could use this report. And if you wanted to only see the paid employee commission, you could use this report. Now, let's review the commission plans we're going to be using today. Based on the requirements we discussed, we're going to be needing 2 types of plans today: a services sales manager plan and a services sales team plan. Now, I've already opened the services sales manager plan in the other tab. Let's first review the sales team. So, as discussed, the commissions plan is where we match our schedules to our employees, and it's also where we can see our calculations. In the services sales team plan, we have 3 types of schedules: implementation services sold in the Americas, implementation services sold in EMEA, and a bonus for anything sold beneath headquarters. The sales reps on this plan are Alex Ricardo and John Norman. Here we have the currencies for the subsidiaries they're related to, meaning that Alex would get paid out in Danish krones and John will get paid out in Canadian dollars. The date eligibility here is for the commissions engine to read which transactions should be eligible for commissions before even applying the schedules. So any transactions between July 1st and December 31st will be considered for both of these employees. Now, because we're using quotas for these commission schedules, we'll only have period calculations and no transaction calculations in this case. Now, what you can expect to see beneath period calculations is a grouping of employee names with the schedules, as well as the periods, items, and then all of your calculations grouped into those schedules. For instance, the basis of the transaction amounts, the calculations based on the rates that were applied, the previously authorized commissions, the currently eligible amounts, and finally, the amounts that have been paid to the employee. Now, we get an even better visualization of this with our commissions overview report. So we'll get to that in a few minutes. Let's start by reviewing the Implementation Services Americas schedule. So this is a relatively simple schedule. We're capturing transactions within the Americas, which is a consolidated subsidiary. USD is the base currency for the Americas consolidated subsidiary. We're basing this schedule on a quota, which is per year. It's categorized by item, and the commissions are eligible on collections or customer payment. Now, we could have listed many items here with many different rates, but keeping this simple, so we have one item and we have the rates we discussed. 5% below quota achievement and 10% above quota achievement. We'll notice that our thresholds are up here and our rates are below. Now, this is a marginal calculation scale and we're using a percentage as our rate. Now let's review our other schedules. Now for EMEA, this is essentially the exact same schedule, but instead we're reading from all transactions beneath EMEA with the base currency of the British pound. The rates are the same, the thresholds are the same. Finally, let's review the bonus schedule. Now we'll notice the key differences here are that we're capturing all transactions beneath the headquarters subsidiary, which means we're going to be consolidating all transaction amounts up to the subsidiary using the consolidated exchange rates. Then, if we've achieved our quota, we'll be paying out $10,000 to the employee. You'll notice here that we're using marginal, but instead of percentage, we're using an amount. Now let's head over to our manager plan and see what the differences are. On this manager plan, we have one schedule for the sales manager. As discussed, it will have a 1% and 2% rate. The sales reps will be Clara Sagan for the same date range as we had John and Alex. And again, our period calculations will be listed here. Let's have a look at the schedule. Some of the major differences between the other schedules and this one will be that here we have manager schedule checked off. This means that for all implementation services sold by not only the manager, but their subordinates or those they are supervising, we will have commissions calculated with rates of 1% and 2%, as discussed earlier. Now let's review our quotas. We're going to navigate to Setup, Other Setup, Establish Quotas, and look at the list. Now, of interest are only the first four here. We have 2 quotas for John, 1 quota for Clara, and 1 quota for Alex. Now, Clara's quota is actually a team quota. So this is going to be what we measure against for all sales done by John, Alex, and Clara. Obviously, Clara's rates were a little bit lower. John actually has two quotas. He has a quota for the consolidated level of the Americas and the consolidated level of EMEA. Now, this is possible. This is why I mentioned the subsidiary structure before, because we can set quotas per each consolidated subsidiary, and we even could get down into the department, class, and location levels and have separate quotas for a variety of combinations. In this case, though, we're simply measuring sales of implementation services for all three of these employees, and John has two quotas. Alex and Clara are on the highest subsidiary level of consolidation with headquarters. Now let's have a quick peek at what these look like before we go to our report. So for Clara, beneath headquarters, for the year of 2017, we're going to have a $12 million quota, which is going to be a team quota, meaning that any services sold by Clara's subordinates or those she supervises, as well as herself, will be measured against this quota, and then the schedule, or the manager's schedule, I should say, will determine which rate she's receiving in terms of commissions. Now, we've distributed this quota for every period here, but because we're using the annual period, all of her sales will be measured against the $12 million mark, instead of being broken into period, like we would be able to do with other commission schedules. And we have our implementation services item here. All right, now let's have a look at our report. Here we see we're looking at the current month of commissions with the context set to headquarters. Now, in one world, in financial reporting, you'll normally use the subsidiary context to see things consolidated on a certain level, but it's a bit different with commissions. With commissions, we're actually using the subsidiary context to filter on the schedules that we set up earlier. So we had two types of schedules set up that were on the headquarters level. We had Clara's manager schedule, and we had the bonus schedule for John and for Alex. Here we see our calculations. So this is the standard commissions report, and we could customize this to look a lot different, but it's important to note that this is out of the box and very easy to use. Here we have our transaction base amounts, the calculated amount based on that transaction amount. Here we see that $10,000 were paid out, and the eligible total is also $10,000. Now, remember that the eligibility of commissions was based on customer payment, which means that this invoice has been paid in full so that the calculated amount is equal to the eligible amount. Now, this has not yet been authorized and it's not yet been paid out. However, John does have one commission authorized so far and paid out. Let's take a look at how we can switch contexts and see different calculations. Now in the Americas, John is the only one that's sold anything. As we see here, he has two deals, and each of them are fully eligible, have been fully authorized, and have been fully paid out. Now this is based on the Implementation Services Americas schedule, which was based on the subsidiary of the Americas. Now let's have a look at EMEA. Now we have two deals, one by Alex and one by John, and it seems like neither of these have received payment yet, so nothing is eligible. However, we do have the calculated total, which looks to be 5% of the transaction base amounts here. All right, now let's see, by diving in to these transactions, if we can update this report in real time by accepting a customer payment. All right, so here we have our invoice for Abbott Technologies, based in the United Kingdom. Implementation services have been sold 800 hours, and Alex is the sales rep. Now, if you're using team selling and you wanted to split commissions, you could have a sales team sub tab here with a contribution percentage, but for the case of this demo, we do not have that. So let's accept the payment and go back to our report and see what's been updated. Now, very simply, I'm going to make sure that I've applied the amount to the invoice. I have a payment amount, I have an invoice, and I'm going to save. All right, now I'm going to go back to our report and show you what's been updated. Et voila. We have the 10,400 pounds in the eligible total amount because this invoice has now been paid and we've met the eligibility requirements. Now, let's go through authorizing this and paying it out and show you how to get it through the entire flow. From payroll, commissions, authorize employee commissions. Now, right at the top here, we see Alex Ricardo. So I'm going to check this. I'm going to bypass accounting approval so we can go straight through to paying after this. And I'm going to authorize. Refresh one time and it should be complete. There we go. Now let's jump quickly back to the report. And in real time, now we have an authorized total and we can pay it out. So let's finish with the normal AP process of paying bills. Now I'm simply going to change to the proper account, to the Denmark operating account so that I can pay out Alex. And down here I see Alex is going to be paid out in Danish krones. And everything looks good here, so I'm going to save. One more time we'll refresh. And let's go back to our report and we should be seeing it right in time. As we see, now we went all the way through from the calculated amount, we've received customer payment and then we have an eligible total. We've just authorized it and approved it in the same step and finally paid out the commissions to Alex. So I hope this was insightful and that you saw that there's a lot of flexibility with the commissions module. You can do a lot with having different segmentation of your quotas or your schedules, and you can separate your rates or your bonuses in a lot of ways. Please feel free to fill your questions at the end of this session, and now we're going to go forward with the recap. So let's recap, starting with the NetSuite Commissions benefits. It gives you real-time visibility of commissions calculations with no need for data extraction and manipulation. If you use OneWorld and Payroll, it's integrated with those seamlessly. It also accommodates team selling and splitting of commissions. As you saw in the demo, there's a very low effort to pay out and report on employee commissions. And you also have standard reports on the stage of commissions from eligibility to payout. Some of the concepts we went through included the commissions plan with commission schedules. Commission schedules are what house the criteria or the triggering transaction, as well as the rates, amounts, and bonuses. Commission plan also is where you assign employees with a date range, and where you can view calculations per period or per transaction. And although we didn't demonstrate it here, the commissionable item search allows for even greater flexibility. So if you feel that your sales criteria or commissions criteria don't fit within the item, subsidiary, class, department, or location structure of the standard commission schedule, please reach out to us, because if you're looking to have the NetSuite commission benefits, but not sure if it'll fit within what we've shown you, perhaps it could fit within the commissionable item search. Now, how can Gurus help you? Well, we follow a true partnership approach when we work with our clients. We make sure that their needs are heard and we understand their business. With 11 years of proven process, we've developed flexible modes of engagement no matter what the needs are with our client. We also have a collaborative workshop methodology to ensure that we enable our clients throughout the implementation process. And even after the implementation is completed, we also have ongoing account management. So that if you have any support or optimization needs, we're here to listen and we can help. Thank you very much for joining us today. Here's our toll-free number, our email, and our website for more information. Remember, at Gurus, we scale up your business with cloud solutions. And now I'll open the floor to questions.